Debbie Bell-Hosking here at Sibos in London 2019, and I'm talking to Daniel Schmand of Deutsche Bank and Rebecca Harding, who's an independent economist. Welcome.
Thank you.
Welcome.
So we're at Sibos. What has changed since last year?
I think from an economist perspective, the big thing that's changed since last year is really an increase in the tensions between the United States and China, ratcheting up of the rhetoric around a trade war, some action around that as well, and generally speaking, a more febrile atmosphere within banks in terms of understanding what that means for their businesses. So a lot more tense, I think, than we were this time last year. What do you think?
I totally agree. I would even say we have come to a completely bipolar world. On the one hand, America, on the other hand, China, and that is going to stay at least for the foreseeable decades. Second point I want to make is there were a lot of hopes that the rates regime of the ECB would go the other way, and what have we seen? A further softening of the rates regime. I think the old normal has become a constant normal for the coming future.
I think I'd also add to that we've not seen trade pick up in the way that we were expecting trade to pick up over the last 18 months. So, last year we were looking perhaps at something that was slightly more optimistic from a trade perspective. That hasn't happened at all. The tensions are really beginning to have an impact on the amount of trade that's flowing around the world. Certainly in terms of goods, we don't know exactly what's going around the world in terms of services and digital.
So, and that's actually a very interesting point. So while trade is not flourishing, trade finance has a good run because the tension has increased volatility on the pricing side. More and more clients come to talk and are saying, look, this uncertainty is here to stay. How do I operate in such an environment? So while trade flows are down, trade finance and basically the de-risking element is up.
And we're talking trade finance. I mean, where has technology taken us in the last year?
Again, from an economics perspective, technology is having a huge impact on the way in which not just trade finance, actually trade is flowing around the world. And this is deeply interesting from a trade economist point of view because we don't actually know how to measure it. So it's very difficult to get under the surface. We're seeing it happen in national accounts. We know that there's something happening there that's in the digital and services space. We just don't know how much of it there is. So technology is having a big impact on trade.
Yeah. I totally agree with Rebecca, and I would say what has really changed since last time, some of the things we've seen testing out, like the Trade Information Network, are now really taking off. So I see more and more of the platforms, the investments being operationalized, and it now comes to the test. What of those models, platforms, blockchains, whatever you want to call it, have a viable business model? So it comes now more from a concept to how do we operate it, how do we commercialize the technology which is around.
I think there are a lot of things there that we're able to say. Things like open APIs might be able to be introduced more quickly than things like blockchain. That could have a bigger impact on speeding up delivery to some of the exporters in emerging markets, but in Europe as well, who are smaller. So there are huge opportunities there.
Yeah. And in particular, to address one point which we have debated a lot is like, how do we get financing into the SME space? Their technology will be a critical enabler, in particularly to reduce the cost of operations per unit or per client. So basically models play out, and the SME challenge, which we see in the industry, those two come at the moment nicely together.
So you've touched on a challenge there. What are the other challenges that are presenting themselves?
It depends what level you look at, obviously, to determine the challenges. From an economic point of view, we are in uncharted waters. We are, as Daniel said, seeing a breakdown in the sort of global consensus that we had only a few years ago. We're beginning to see China and the US, but don't forget Russia. Russia's important as well. And there is a new nexus of trade finance and delivery of trade finance that's developing around China and Russia. So these are tensions. We're going through this big transition. In a sense, I would argue trade is being gamed. It's being used as a proxy proxy for this bigger conflict that's there. That's some of the challenge, I think.
So I totally agree, and the fundamental question it then boils down to is, what is Europe's role in that challenging environment? So basically, while we have these mega challenges with, like you rightly said, Russia, China, and the US, you have those mini challenges, and I might be wrong, within Europe, like how we're going to deal with Brexit. So it would be more helpful if the Europeans, in that challenging environment they are surrounded by, would be more united. Having said that, I think that's a great call for banks who have strong trade finance DNA to step in and to help out to navigate the client base safely through those challenging environments.
Is the dollar a challenging environment?
So in the trade finance world, absolutely. What you are seeing at the moment is almost a conflict between emerging currencies like the RMB, potentially also cryptocurrencies, and the US dollar. So a lot of this digital space that's being fought over at the moment, and trade is being gamed as a result of all of this, is about US dollar hegemony, actually.
I think it's a very interesting question, because we've heard that in the past the dollar can be weaponized to basically set a political agenda. And I think that what we've also seen in Germany, and the German government has made a big move on crypto and blockchain to also find the legal environment, that then there is now, everybody acknowledges the new normal, and now we are seeing more and more technology and those types being an answer to the challenge and navigate countries out of that deadlock.
I have you both on the sofa at this year's SciBoss. Next year, if we repeat the experience, what do you think we'll be talking about at next year's SciBoss?
I think we'll be talking more about the separation of the United States and China. I think we will perhaps be talking about digital alternatives to the US dollar. I think we'll be talking about the way in which technology is helping us reach parts of the market in the financial sector that we haven't been able to reach for a long time. Very exciting, actually. Let's hope with the tensions that we see at the moment are not our subject of conversation next year.
Yeah. So I totally, as usually, agree with Rebecca. The only thing we might see as a new thing being talked more about next year's SciBoss is around sustainability and ESG. Those Friday for Future movement is just taking off, and we as a finance industry cannot ignore it. I think we will have a talk around that topic next time in more depth, and how we as an industry address those points.
Absolutely, and I think I'd say that's one area where Europe can lead, because it's very strong in environmental and sustainable supply chains. It's very strong on the types of technology that are needed to ensure a better and more environmentally friendly world.
I really agree on that point. I think that is the interesting third component we then can add to the geopolitical moves we are seeing, and that will be an interesting element. And I'm already excited to talk next year at SciBoss about how we go about ESG and sustainability.
Right, well, until we meet again next year, may I say it's been lovely talking to you both. Thank you.
Thank you
so much.